So McDougall versus IRS Commissioner follows Anenberg, uh, which is an interesting case here. Upon decedent's death in 2011, the residuary of her estate, through her will, created a trust for the benefit of her husband and kids. The husband had an income interest, the kids had remainder interests. Um, Upon surviving spouses, or sorry, a surviving spouse as representative of the decedent's estate made a QTIP election for the husband's income interest. Then the husband and the kids entered into a non-judicial modification agreement to commute the residuary trusts that were for the benefit of the kids and distribute everything to the husband. Husband then took the property, sold it to Dynasty Trust in exchange for prom notes. The IRS somehow argued that, again, just like they did in Anenberg, that this husband had somehow made a gift to himself by taking the property that was already subject to the QTIP fiction. The court held that following Anenberg, the husband didn't make a gift to himself, but that the kids did make a gift to the husband when they commuted the trusts. And that point wasn't argued in Anenberg. In Anenberg, the IRS only went after the spouse. They didn't go after the kids. Similarly, had entered into a non-judicial modification agreement to terminate the residuary trusts. So, this case makes sense. Obviously, the spouse isn't giving themselves a gift, but when the kids are commuting their interest, then that is a gift. In the state of Anenberg, they face the question: what happens when taxpayers subject to the QTIP regime take steps to conform to their actual legal arrangements to the regime's legal fiction? As I said, the kids and the surviving spouse in Anenberg terminated the trust pursuant. Well, I guess that one that was pursuant to a state court. It wasn't non-judicial, so they actually went to court to terminate those residuary trusts. So what's the difference here? Basically, right, the IRS here, as in the estate of Anenberg, the IRS here maintained that the non-judicial agreement resulted in a gift trust made by the surviving spouse, or in the alternate, coupled with the sale, somehow a gift. Obviously, the sale is not a gift, and revesting the property in yourself when you've already been treated as having the entire property under the QTIP fiction isn't a gift to yourself. However, this case is different, as it says here. Unlike in the state of Anenberg, the commissioner also determined deficiencies against the holders of the remainder interest because they commuted them and gave them to the surviving spouse. Basically, right, and the focus of the analysis is whether the kids transferred valuable rights gratuitously for nothing. The court finds that they did, transferred for nothing. It's basically just about the scope of who can invoke the QTIP fiction. What is it? The scope of the QTIP fiction, and it basically holds that the kids can't, but the spouse can, because the spouse is part of the marital